You know what it is. That's right. It's time to talk money with your money nerd and financial coach. Now, tighten those purse strings and open those ears. It's the Money Talk with Tiff podcast.
Hey everyone, I'm so excited because I have Todd Christensen on the line. Now, once he gets started talking, you might be like, oh, this guy sounds familiar. Well, you probably be right. Actually, you are right because he was on episode 188 of the podcast where we talked about spending personalities. And that was a really good episode. So if you haven't listened to that, please go back and listen to it because you might realize what kind of spender you are. But today we want to talk about reverse mortgages. So, hey, Todd, how are you today?
It's so good to be with you again. I'm doing great. Thanks.
Awesome. I'm glad to have you back. I love repeats because there's a lot to talk about. So with this topic, I wanted to get into reverse mortgages because for one, I've never talked about it on the podcast before. And then for two, I feel like a lot of people don't even know what they are.
Right.
And so let's just start off there. What are reverse mortgages?
So it's a great question because we've heard of them. A lot of people may have heard of them, but they have no idea what they mean, how they work. So a reverse mortgage is a way of for people who are 62 or older to tap into the equity in their home and use it for whatever purpose they choose, and then not actually have to have a monthly payment on that mortgage. So it's a way of not only getting rid of your mortgage, but also getting some cash income, cash flow through your senior years.
Wait a minute. So
that's too good to be true, right?
Exactly. And that's exactly what I was going to say. And I remember seeing, when I used to watch television and seeing like the little infomercials come up about reverse mortgages.
Mm-hmm.
And I'm like, this just sounds too good to be true. So
right.
I know there has to be some catches with this.
Of course.
What are the catches?
Yeah. So you're using the equity in your mortgage. That's what the lender is doing. They're giving you money against the value of the home that you own. Basically, when you take out a reverse mortgage, the lender pays off any mortgage that you have left. And you're getting some cash, whether you're taking out a lump sum, there are some limitations for how much you can take out, or whether you get it over a certain term, or whether you get it over a lifetime. But at the end of the home mortgage, basically, it doesn't have to be repaid until the owner of the home either passes away, the borrower passes away, or they move out of the home, at which point the mortgage gets paid off typically by the sale of the home, or if a family member wants to pay for it, they have the option to buy it. But the home is usually the value of what you've borrowed. So the value of the mortgage is going up every month instead of coming down, but it's still generally less than the value of the home. So you can pay off the home, and there still might be some equity left from that you can have distributed to your heirs. But that's not always the case. That's kind of the catch, is you don't know. I mean, the longer you live, the less equity you'll have in the home to disperse to heirs at your passing.
I see. Okay. So I heard you say that it's for 62 and up. Why is that stipulation there? Is it because the life expectancy?
Yes. Mm-hmm. Yes. Obviously, the longer we live, the less we're going to be able to borrow from that home equity, from that the reverse mortgage, and the calculations take that into account. So if you want to have if you want a lump sum, you only get a certain percentage of the equity that's available. If you want to take a 10-year term, you're going to get a little more money than if you take a 20-year term, or if you give a life. There are options where you can just say, I want a certain amount. I want a payment every single month for as long as I live in this home. And the calculations take that into account, so that the longer you're likely to be in the home, the lower your monthly payment. So there are stipulations, but at 62, that's kind of just the limit. They have to put a limit there, otherwise it's kind of, if you're 40 and want to take out a reverse mortgage, we'd be talking about $20, $30 a month, $50 a month, it would be probably pretty minimal. But it just depends on the size of the home and the amount of equity you have in it. But I tell you, one of the things that I used to, until I became a reverse mortgage, was certified, I'd heard a lot of bad things about reverse mortgage. Mm-hmm. And I don't know if you have heard that, but if you die, if you pass away, and your spouse is still living, they're going to have to get kicked. They're going to get kicked out of the home, and that actually those were some not irrelevant questions to ask years ago. But there were some changes that happened that as long as you get your spouse is on the paperwork, whether they're a borrower or or not a borrower, if they're not on the title of the home, then they at least get to stay in the home, even if the borrower passes away. They may not continue to receive any more payments, but they can remain in the home even after their spouse passes away. So
the key there is if the spouse is on the title of the house? Okay.
Yeah, if they're on the title, typically they'll be co-borrowers, which is and then the amount of the money, the monthly payout is going to be determined by the age of the youngest borrower. And it can't be younger than 62, as I mentioned. If somebody, and I was just talking to a couple last week where she's 59 and he's in his mid 60s, and so she could not be a co-borrower because she's too young. But as long as she's on the paperwork, if he passes away, then she would continue to be able to live there. She just wouldn't continue to receive monthly the payout.
I see. So as someone who's listening to this and I'm like, okay, I'm thinking about my grandpa and just thinking about, okay, will this fit for him? What are some things that we should be thinking about? Like if people are listening like myself who have grandparents or parents that are eligible, what are some things we should be thinking about in order to educate them about this? Like I know we went over what are some of the qualifications. So you have to be over 62. You have to have enough equity. But what else should we be thinking about if we want to, give them this option?
Yeah, that's a good question. The probably one of the biggest things for family members to understand is the effect of a reverse mortgage on the home's equity. It's drawing down the equity as it's paying out this payment every month, or if they, you can actually get out the borrower can take out a line of credit instead of a monthly payment, or both. There's a lot of flexibility with it. But if the family member and the borrower, so that whether a child or a grandchild of the borrower is expecting to inherit that home, that's an important conversation to have. Because if they take out the reverse mortgage, it's going to be more difficult to pay that off over time because the mortgage is increasing. As I said, usually not as much as the value of the home. And even if it did, here's something really interesting, Tiffy. You got it is pretty cool that even if the value of the home or the mortgage exceeded the value of the home, the family is able to pay it off at 97% of the value of the home. So they can actually get a 3% deal on the home if they so choose. In many cases, though, that's not possible for the children or the grandchildren to pay off. So the home does get sold. The children or the grandchildren are not responsible for paying anything more than anything. It's not a debt that is inherited by the children. It goes to the estate, but the estate then sells it, and then that's the end of that.
Interesting. Okay. So, and I guess I'll get a little personal here because I'm
Okay.
just curious on how
Yeah.
this could potentially work. So, my grandma passed away in September, which
Hmm.
was very, very unexpected.
I'm
Very
sorry about that.
unexpected. Thank
Yeah.
you. And so, funerals are very, very expensive now.
Yes, they
She
can
did
be.
have some insurance. She does have some
Hmm.
life insurance, but it didn't cover the full cost. And so my grandpa had to get into a little debt in order to finish paying for the arrangements. And
Hmm.
so would in this situation, would a reverse mortgage be an option for him to kind of transfer, like to kind of refinance or
Yeah.
consolidate that debt? Or would other things be more feasible for that particular situation? Like, who is this good for?
Yeah. Right. That's a good question. Here's the thing. I mean, I obviously can't give individual
Of course.
financial advice, but the proceeds can be used for any purpose.
Okay.
What the borrower chooses to do with them is up to the borrower. But generally, I mean, you can also you can look at other alternatives. In fact, as you're going through, if somebody wants to look into a reverse mortgage, they have to meet with a reverse mortgage counselor. And one of the requirements of that counseling session is to consider alternatives, such as, well, what about just a standard home equity line of credit,
Mhm.
which you can borrow against, the difference being that you have to make monthly payments on that and eventually pay it off. Or looking at maybe county or city programs where you can have them put a stop to tax payments for the remainder of the senior's residency in the home. There are other options. What you can do, I mean, there's a lot of really cool things you can do with a reverse mortgage. There are, and so this might be something, because I when I learned about this, I went right to my wife and said, okay, I'd never really thought about a reverse mortgage, but at least we got to consider this, because you could even use a reverse mortgage to purchase a second home. You could buy like a fourplex. You could use it to purchase a fourplex and rent out as long as you're living in one of the units, a duplex, triplex, fourplex, whatever, you live in one of the units, collect rent for the rest of your life and never have a mortgage payment.
Mm.
It sounds complicated, but that's one of the really interesting options that I have heard people looking at doing. And I told my wife, so that's something we got to at least consider.
Right, right. And
So
so are these reverse mortgage rates kind of like regular mortgage rates, or like what's the difference there?
they're going to be pretty close. It's not going to be, right now, for example, mortgage rates, and I haven't looked at the reverse mortgage rates recently, but we're currently at a 7% for a new home typically. So
Mhm.
reverse mortgages are probably going to mean that very similar to that. And of course, the higher the interest, and most, except for if you take a lump sum, that can be a fixed interest rate. But most of the others are variable interest rates. So the interest rate will go up and down each maybe monthly or yearly, depending on which one you choose. But as the interest rate goes up, it's going to be less available to you, of course, to borrow against the equity, the value of your home. So it will definitely have an effect on how much you get or have access to. But this is 7%. Are we going to go back down to the days of the 4% and the 3.5%? I wish I could say yes. Historically, you go back to the 80s where it was 12 and 15 and 18%. Other than those extremely high months, years, a decade, and our really low decade of the 2000s and early 2010s and early 2020s, 6-7% is pretty normal.
Mhm.
But yeah, that's probably about what you can expect going forward. Is just watch the rates, as they will vary, and it will have an effect on how much you have access to.
Gotcha, gotcha. So, of course, we have to hit on like well, we hit on some of the cons, but who is this not good for? Like, who should not be considering a
Hmm.
reverse mortgage?
Yeah, it's a good question. You got to understand that even with the reverse mortgage, you still have to pay your property taxes. The lender wants to make sure that you're keeping up the value of the home, so that you have to do certain. You have to keep the value. You have to keep the home in good condition. So you're not going to be able to borrow against a home that's about to fall down, and whether now or in the future. So somebody who can't really take care of their home is probably not a good idea. It's probably not a good situation for them. They also have to continue to make HOA payments if there's a HOA involved. If you stop making payments to any of those three entities, you stop making your property tax payments, you stop keeping up the home, and you stop paying HOA, you could default on the loan and you could lose the home. Somebody else who might not be a great idea for if you know you're not going to be in the home for very long, because you take out the mortgage. There are fees. A lot of those fees are incorporated into the closing, which means that those fees are going to be gathering interest over the time of the mortgage, of the reverse mortgage. So if you think your health may not permit for a few more than a few years, it might not be a good idea. Or if you don't plan on staying in the house more than a few months a year, maybe you are a snowbird and you go south for the winter, you have to live in the home at least 6 months and a day every year in order to maintain a reverse mortgage.
Oh, interesting. So
Yeah.
that's an interesting stipulation. But I guess it makes sense if they want you to keep up the house. Because,
Yeah.
I mean, if you haven't been there in half a year, you don't know what's going on.
Right. Something else to keep in mind, that if you get married, maybe whether you're single at the beginning of the reverse mortgage or you're widowed and you remarry, that new spouse does not have the same protections. They're not going to be on the reverse mortgage, so that if something happens to you, they're when you pass away or when you move into an assisted living for, I think it's 12 months, consecutive months, they're going to have to either pay for the home, pay off the mortgage, or move as well. So there are some definitely considerations to be aware of.
So, Todd, I mean, this sounds very, very interesting. And especially as someone who has, a grandpa that does qualify. Of course, he's over 62.
Mm-hmm.
And, just thinking about, my mom, when she does get up there in age, she's not quite there yet, but Mom, if you're listening, I'm sorry. But, just thinking about this as a young person and how I could help, the older generation, kind of understand another option that may be available to them. So I just want to make sure that we're hitting on all the pros and cons. Because see, for me, like you said at the beginning, right, about the misconceptions, for me, I saw those commercials, the infomercials, and I'm like, oh gosh, here we go. Another scam.
Celebrity of the day.
Right. Or something. So, I want to make sure that people are clear, this is a legit thing that you could do. And you do have to go to a qualified person like Todd in order to even, get access to this. So that is good. Not just some Joe Schmo can put you in a reverse mortgage.
Right.
And then also just letting people know what it is and the process behind it. Now, if I have one more question, because of course my brain is always going.
That's okay.
Going back to if the person who has the reverse mortgage passes away, with the estate, okay, so the mortgage company, of course, they're going to want their money. They take their money. Once they do that, then the house is the estate's now. It now gets passed on, or are there any other stipulations?
If the estate can pay off the mortgage, then it can be passed to the heirs, correct? If not, then it is owned by the lender, and they will turn around and sell it.
Gotcha. So pretty much like any other mortgage, really.
Yeah. Yes.
Okay.
So one other thing I wanted to share, because you brought up the question: what happens if you're in a home and after a little while you realize it's not for you? You've got the reverse mortgage. You want to get out of the reverse mortgage.
Mm.
that you can pay off the reverse mortgage at any time. There's no stipulation saying you can't. You have to maintain it. So let's say, okay, I've got a reverse mortgage and we're in it for 5 years, and we realize, this is not working. We've got to move somewhere warmer or somewhere closer to other family. Then you sell the home and you keep the equity. I mean, you keep the difference between what you sell it for and what you owed on the mortgage, just like any other home. The difference being that from the time you get the reverse mortgage, the interest is growing and the size of the mortgage is growing. But it typically starts small and gets bigger. So you can still move, sell the home, pay it off, and use equity that's available to you.
Gotcha. Okay. So now that you say that, and along that same vein, is it possible to refinance out of the reverse mortgage? So let's say you don't want to move, or you don't want to sell the house because maybe you want to use it as an investment property or whatever.
Mm-hmm.
But you realize that a reverse mortgage is not the ideal situation for you. Maybe something changed.
Mm-hmm.
And so can you refinance back into like a conventional loan or anything like that?
I'm sure you can, as long as the value is greater than the reverse mortgage that's owed. I'm sure you're going to be able to find a lender to basically give you a mortgage on that. Basically refinance. Yes, you can refinance.
Gotcha. Okay. All right. So cool. Well, I learned a ton today because I came in very wet behind the ears when it came to reverse mortgages. So now I understand them a lot better actually. And
Yeah.
it's not just some scam or something else that you see on TV. So
Yeah, the
I've
lenders have to
learned a
be
lot.
approved. There's a HUD approved lenders, a list out there, and those of us who are reverse mortgage, or what we call the technical term is home equity conversion mortgage, or HECM, HECM. Those of us who are HECM
Realize that a
counselors,
reverse mortgage.
we can't refer to a specific lender. All we can do is refer to the list that HUD has. So it is legit. But if you do see some of those ads, there are some agencies, maybe there are some lenders that try and steer you to some other non HUD product. But I of course, being a HUD approved HECM counselor, I'm going to recommend you sticking with a HUD approved lender.
Nice, nice. And see, just when I said I've learned so much and thought that there was nothing else I could learn, I
Sure.
learned what HECM is.
Oh, my HECM.
That is awesome. You are always so full of knowledge, and I'm so glad that you brought it on the podcast today. So, if people were interested in learning more about you, reverse mortgages, maybe they're playing this for their grandparents or parents, and they're like, "Oh, I want to do this."
Yeah.
How could people get in contact with you?
They can reach me at through our organization, MoneyFit by Debt Reduction Services, and it's moneyfit.org. Or they can email me, Todd, Todd, at moneyfit.org.
Perfect, perfect. And I'll make sure I have all of that information in the show notes. And I appreciate you coming on the show and educating us. And I'm saying us because myself included on reverse mortgages. This was jam packed with information. And if you all are listening and you want to get in touch with Todd, I'll have all of that in the show notes. So thank you so much, Todd, for coming on the show again.
It's been my pleasure.
Thank you. Bye. To learn.
Sure.
I learned what HECM is.
Oh, my HECM.
That is awesome. You are always so full of knowledge, and I'm so glad that you brought it on the podcast today. So, if people were interested in learning more about you, reverse mortgages, maybe they're playing this for their grandparents or parents, and they're like, "Oh, I want to do this."
Yeah.
How could people get in contact with you?
They can reach me at through our organization, MoneyFit by Debt Reduction Services, and it's moneyfit.org. Or they can email me, Todd, Todd, at moneyfit.org.
Perfect, perfect. And I'll make sure I have all of that information in the show notes. And I appreciate you coming on the show and educating us, and I'm saying us because myself included, on reverse mortgages. This was jam-packed with information. And if you all are listening and you want to get in touch with Todd, I'll have all of that in the show notes. So thank you so much, Todd, for coming on the show again today.
It's been my pleasure.
Thank you. Bye.
Thank you for listening, joining, and being a part of the Money Talk with Tiff podcast this week. You can check Tiff out every Thursday for a new Money Talk podcast. But if you just can't wait until next week, you can listen to previous podcast episodes at moneytalkwitht.com or follow Tiff on all social media platforms at Money Talk with T. Until next time, spend wise by spending less than you make. A word to the money wise is always sufficient.